Okay, we're recording now too.
All right. Fantastic. Well, thank you everybody for tuning in. I am really excited about this webinar. We are going to talk about all things interest rates and some creative ways that you can achieve homeownership. We're also going to talk about the insurance market and how that can impact, what you can afford and how you can best protect your home. But first off, I'm going to kick it off and talk a little bit about the housing market. So I'm going to share my screen for just a second here. So I am Allison Abiyu. I was born and raised in Kansas, but I moved down here to South Florida about 14 years ago. Never looked back. Absolutely love the beach. I do not mind our 2 seasons of summer, real summer, and then like winter summer. I'm married to a former chef. He's a very creative person, and I have 2 crazy little boys at home that hopefully will not come knocking on the door. I am also a serial entrepreneur, and I dove into real estate headfirst over a year ago now and absolutely fell in love. I am super passionate about customer service and making sure my clients or anybody who even comes to me with a question gets the answers they're looking for and the help they deserve. I fully believe in 100% integrity and honesty, as well as keeping up that communication, letting people know what's going on. One of the reasons I chose Lamakia Realty was because of their heart, their integrity, and the tools that they offer buyers and sellers to really help them make the most of the home buying and selling process. Lamakia was actually started down here in South Florida 3 years ago. And we came from up north in Maryland and Massachusetts and Rhode Island, all those New England states, there for about 12 years. And then down here, they realized their clients weren't getting the level of service they expected. So we opened up 3 years ago, and here we are. One of the first things I always talk about with home buyers is the fact that whether it's myself or another agent, you want to make sure that you are represented. This is the biggest asset, most likely, that you're going to purchase in your life. And you want to make sure that you are protected, that your financial interests are at the forefront of the deal. So you can see in this graph, the seller's agent is contractually obligated to get the seller the best price. So if you walk into an open house or if you go to a listing, that seller has no reason to make sure that you're getting the best price. They want to get the seller the best price. So that buyer's agent is going to help you not only negotiate, they'll make sure that they're disclosing all the information regarding that property to you. They're going to help you structure the offer that best fits your situation. And they're, of course, going to negotiate all the way through the deal for you. One of my favorite tools that I like for my buyers is our Buyer Advantage program, which basically gives you real-time priority access to the properties on the MLS, meaning you basically have the same access that realtors do. You can get immediate notification. You can compare properties side by side, and you're getting accurate MLS data. A lot of things that my buyers get frustrated with is when they use Zillow or Realtor or Trulia and it says a property's actively for sale or it lists the price or things like that. And that information just unfortunately is not accurate. So this is what's going to give those buyers the accurate information. Another program that we offer is Lamakia Links, and that is a proprietary program. Only at Lamakia we have this. And it's a pre-list program. So as we hear about properties that are going to be coming on the market soon, it goes into our database, and any of the thousands of buyers that we have in the system get access to that. So we can notify them before the property lists, meaning they might be able to get themselves a really good deal and not even have to compete with other buyers. This is also great for sellers because that means before your property even lists, you already have thousands of buyers that might be a potential option for your home. And then, of course, the buyer timeline. Everybody wants to know, well, how long does it take? Well, from the time that we go under contract, it typically takes 30 to 45 days. And that can depend. We're going to talk to Max a little bit, and he's going to walk us through some program options where we can speed that up. We could even slow that down, depending on what is best for you as a buyer and in that situation. And of course, as your agent, I'd be there every step of the way. So just real quick before I pass it over to Max, I'm going to go over some. Oh, there we go. don't know what happened. Oh, okay. Well, housing market updates. These are the homes that are listed monthly. So the purple line is our current year, 2023. And you can see that it actually stayed stable from August to September. We don't quite have the October numbers yet, but it might be just slightly lower than that, which is a good sign because that means our inventory is holding steady. When you can see typically at this time of year, it starts to dip. Then these are the number of homes that are listed each month. So we're actually going up, which is really exciting. That's the active inventory. The average selling price. So this is what a lot of people want to know. When are the housing prices going to crash? Well, as you saw back on the inventory, we're still well below what we were in 2019 and 2020. So inventory is still way too low for prices to crash. Will they dip a little bit? They might. We don't know. We'll see what happens when the interest rates go up and inventory picks up. But that's kind of, you can see we're still at a 2% year to year in price increase down here in South Florida. And then this is the condos. So you can see the condos are slowly going down, and that has to do with a lot of the legislation that was passed. The condos are needing more assessments, so they're going to have to come down on price to account for the assessments that they have. So that's it that I have for the housing market update and everything. I'm going to kick it over to Max to talk about the home buying process and some creative financing that you can utilize.
Yeah, so thank you, Allison. I hope you can hear me okay.
Yes.
Awesome. So yeah, my name is Max Fish. I am the owner of Nationwide Mortgage down here in South Florida. So we have a few different locations, but our corporate office is down here. And I haven't been in the lending industry for a super long time. I got in about 4 years ago, and I was actually a math teacher and a football coach prior. So I taught 8th and 9th grade algebra and coached varsity football at a local school, private school. And the way that I got into the industry, just real quick, is I wanted a way to where I could be a nerd, right, and do math, but also be social and do things like this, right? And there aren't that many avenues to do that. You're either behind a desk punching numbers, or you're out and you're a salesman, right? And talking to people and creating relationships. So I kind of wanted to combine those two things, and that's how I got into the business. It's one of those things that the attributes of the mortgage industry are what drew me, but now being in the business, helping families, being hundreds and hundreds of transactions in, it's one of the most rewarding things that we can do, right? And we're all in this industry because we want to help families achieve home ownership, which is awesome once we can get to that closing table. So that's kind of how I got into the business and why I've stayed in the business, right? So that's why, talking about these things is exciting, right? We want to talk about different ways to navigate through a tough interest rate environment, different programs that might be out there. Everybody does the typical, okay, you qualify for conventional FHA. If you're a veteran, you can get a VA loan, right? But there are programs within those, within the umbrella of those that can help, right? And we want to make sure that people are partnering with people that are well versed in them. So wanted to just share my screen for a second. I'm going to talk about a few of those. The first one that I'm going to talk about is one that a lot of people have heard about, and that is the temporary buy down. So what I did here was I created a calculator that it's kind of foolproof. You can plug numbers in. You can see that I plugged in a loan amount of 380, purchase price of 475. So that's somebody that's putting 20% down. And let's just say this is the rate they're getting. So the cool part about this is it gives, everybody's heard of the 2-1 buy down. But there's multiple options. And for those of you guys who don't know, what this buy down is it's a temporary buy down. So for example, I'll use the 2-1 as an example. What a 2-1 buy down means is that the first year is 2% lower, and the second year it's 1% lower. Okay. And then the starting rate. So for example, if your starting rate is 7.49, then for the first year, it'll be 5.49. The second year, it'll be 6.49. Okay. So the cool part about this is that there's different options. There's the 1% lower for the first year, and then it goes back to regular. That would be the 1-0. The 1-1 would be it's 1% lower for the first 2 years. The 2-1 we just explained, and then the 3-2-1 would be 3% lower for the first year, 2% lower for the second year, 1% lower for the third year. So what this graph is showing us is it's showing what your payment would have been. Okay, it's showing what it is going to be. We're under the buy down payment section. Okay, and then it shows the monthly savings. Okay, and then the annual savings. Okay, so the way that this is structured is the annual savings added together. So we'll look at the 2-1 buy down box for example. The annual savings for the first year is $59.90 and 40 cents. The annual savings for the second year is $3,060 and 60 cents. Combined, that's $9,051. That $9,051 is not going to be paid by the buyer. It's going to be paid by the seller. Okay. And people will say, well, why would the seller want to contribute to my rate buy down? Right? Well, for a few reasons. One, it makes their listing way more marketable if they offer something like this. Okay. And in a high interest rate environment, there's not just floods of buyers out. So buyers have a little bit more leverage in asking for a seller concession like this. And number two, there's ways to structure it, which is what we're talking about, creative ways to finance. There's ways to structure this buy down where the seller gets what they want and the buyer gets what they want. For example, let's say a property is $500,000 and this costs $9,000. Well, maybe you can offer $509 with a $9,000 seller concession. The seller still gets $500,000, right? You get your $9,000 to go towards your 2-1 buy down. And when people say, yeah, but then I'm paying a mortgage on $509 instead of $500. Yes, but that extra $9,000 financed over 30 years is about a $45 a month difference. So you would be spending $45 more a month to potentially save $500 in the first year and $255 in the second year. So there are ways to structure it to where it becomes, hey, the sellers win, the buyers win, and now we've kind of combated the low interest rate market. The two questions that I ask when it comes down to the temporary buy down are these. One, if interest rates were 1% to 2% lower today, would it make you feel more comfortable buying? And when do you think the rates are going to drop? The answer to that question is typically in the next year or two. Well, if we can structure a way, a realtor like Allison and a lender as myself, if we could structure a way where rates are 1% to 2% lower for the next year or two, that's exactly what it seems like people are looking for in this market. And we can make that happen with this program. So that is the temporary buy down and how it can be structured. In this calculator, I can, anybody who wants it, I can send out to anybody. They can mess with numbers and plug it in. Okay. So that's how that's the temporary buy down. All right. Now, next, I want to talk about a program where people can purchase before they sell. So say somebody lives in a property as a primary residence, they own it, and they want to buy a new property, but they've been told that they can't buy before they sell. They need to sell to get their funds, right? Because they want to apply those funds to the new property. Well, we have a way to do that. Okay. The way that we do that is that we have a program that lets you access your equity in your current home before you sell. And the way to do that is, say your property is worth $500,000 and you owe $100,000. They will let you access equity up to 80% of the value. So 80% of 500,000 is 400,000 and you owe 100. So they would let you access 300,000 of your equity to use before selling. The caveat is that you have to, as shown on this graphic, you have to list within 10 days after closing on your new home, and you have to go under contract within 90 days. Okay, so they give you 3 months to go under contract on the home that you're selling, and they let you access that equity prior. Okay, and the cool part about it is because you're planning on selling it, what this company does is we can offer a non-contingent offer on the home that you're selling so that we don't have to count your current mortgage payment and your debt to income ratio on the new home. So it's almost like you're purchasing the new home without the other property. It's almost like you already sold it. There's no penalty for the debt to income ratio. So we don't have to count the mortgage payment on your new purchase, and you get to access your equity. The only caveat is that when you sell that house, as you can see here, the program cost, when you sell, it costs this company that allows us to do this bridge loan, it costs 2.4% of the sale price to do that. They don't charge you on interest. In our model, it was $300,000. They don't charge you interest on that $300,000. There's no fee for that $300,000, except for when you close and you sell, this company charges 2.4%. Okay, so this is perfect for somebody who needs to or sees their dream home and wants to move into it, but they don't know they don't know if they're going to be able to sell their house in time to close on the new one. Well, you can tap into that equity early. You can buy the new one non-contingent on your sale, and then you have 90 days to go under contract on that sale. Okay, so this program is perfect for those individuals who need to do things like that. It's not a one-size-fits-all type of program by any means, but it is something that can help when is needed in those specific situations. Okay, and then next, lastly, before I switch it over to Candy, we have the option of doing a down payment assistance program. Okay, and what we can do there, and can you guys see that on the screen? I'm so sorry. And what we can do here is this down payment assistance program is for an FHA loan. Now, quick caveat, FHA is not just for first-time home buyers. Okay, it's for anybody who doesn't currently have an FHA loan. You can't have 2 FHA loans active. Okay, so you could have had 15 FHA loans, and you could still get an FHA loan as long as those have been sold, paid off, so on and so forth. You don't have another active FHA loan. Typically for FHA loans, you need 3.5% down. Under this down payment assistance program, that 3.5% is a loan. Okay, so they're loaning you your down payment. That's why it's down payment assistance. That loan is a 10-year loan. You have 10 years to pay it back. And the interest rate for that loan is 2% higher than what you're getting on the majority of the loan, 96.5%. Okay, so say it's 7% on the majority of your loan, the 3.5% loan would be 9%. Now, people say, oh, 9%, that's a ton. Remember, it's only on that small portion, the 3.5%. So on a $400,000 house, that's $14,000 that you have 10 years to pay back. Okay, at 9%. There's no prepayment penalty. You can pay it off at any time, but up front, you won't need any money for down payment. And if you get a seller concession, the great realtor like Allison, then you could, in essence, buy a home with no money out of pocket. If the seller pays your closing costs and you're getting the 3.5% loaned, you can buy a home with no money out of pocket. You do need a minimum 600 score. There are no income limits. Okay, so most down payment assistance program have income limits. You could make $1 million and do this. Okay, and there's no additional qualification needed other than what is typically needed for an FHA loan. Okay, we need to have 2 years of employment. The credit score 600. We need to, have ongoing income, salaried, self-employed, same type of thing. Okay, and to kind of touch on what Allison said, and I'll shift back over before I pass it over to Candy here. We specialize in quick closing. So we do 7-day loan commitments. We can close in 13, 14 days. We kind of just try to compress the time period that it typically takes to close loans, just because of the fast pace of the environment that we're in, South Florida. And so with those types of loans, any of the things that we just talked about, we can do within those time periods, and definitely compress transactions that way when and if that is needed. So I'm going to pass it off to Candy to talk about the insurance aspect of the market, but those are the 3 things that I wanted to share today.
That was awesome information, Max and Allison. You know, one thing that all 3 of us are touching on is the cost right now. And that's the biggest thing that everybody's looking at when they're trying to purchase a home, is what is my monthly payment going to be? Will that fit into my budget? So that's really where insurance comes into play into all of this, is having that team on the insurance side, taking that burden off of you. And so that way it's our job to find the most cost-effective, best coverage for you, educate you on long-term and short-term things that we can help to reduce that insurance premium for you as well. So I'll go into all that on the buyer side and seller side. Sellers also how to prepare your home, so that way, especially in a buyer's market, your home is more appealing to those buyers too. So quick introduction, my name's Candy Landers. I'm the owner of Brightway Insurance, the Landers agency in Fort Lauderdale. I've owned my brokerage for roughly about 7 years now, and been at insurance for over 9. Insurance, nobody really likes it, but the thing is we all have to have it. So having a team on your side that is all about education. And that's another reason why I moved down to South Florida to open up my agency. I didn't know a soul down here. Was I knew that I could bring my style of insurance, which is educational. We truly care, lead with a lot of integrity. Our clients, we want them to be informed. I see time and time again where insurance policies are slid under the table, and clients don't know what they are paying for, or what they're not paying for, what they don't have. So that's not how we do business. I want you to know what your options are and be educated, so at the end of the day, you can make the decision on what's best for you and your family. So I'm going to real quickly share my screen here too. I'm going to pull this one over. Okay. Okay, and you guys can see that okay.
Yes, we sure can.
Okay, perfect. So a couple things when you're looking at the factors that impact the cost and availability of homeowners insurance, whether you're a buyer or seller, this is just in general. The determining factors really are age of home, location of the home, which meaning really distance to coast, and then also where are you located in Florida. Truly Southeast Florida, where all 3 of us are located, it's going to be more expensive to insure your home down here versus up in, let's say, Tallahassee or Orlando, where you're more inland and you don't have as much hurricane risk. So location does matter, age and state of major systems in the home, and we'll get into what I mean by that. Your wind mitigation credits, we'll go into that in more detail. If you're in a flood zone or not, I highly recommend flood insurance for everybody, whether you're in a flood zone that's required by your lender or not, but that's a whole nother conversation for a different day too. And then insurance score, which insurance score, if you're buying a home, that's going to be, your credit score is going to be obviously a huge factor when you're buying that home anyway, when you're qualifying for a mortgage. It does go into play on your insurance score as well, and also your claims history. So I won't go into quick detail on these, but I will get into them more once we get to the next slides. Your 4-point inspection, that's what we use for eligibility. We are basically, as your insurance brokerage, we're basically your upfront underwriter. It is our job to determine, based upon your home's factors, which carrier is going to be the best fit for you and which carrier is going to offer you the best premium, so the lowest cost. So that's what the 4-point inspection is for. And then your wind mitigation, that basically is how hurricane resistant is your home. So you get a lot of major discounts on your insurance policies based upon how hurricane resistant your home is. And that's what that wind mitigation inspection shows. So when you're purchasing a home and you're working with Allison, those are 2 of the inspections that she's going to have you get from the inspector, are the 4-point and the wind mit for your home that you're purchasing. If your home is in a required flood zone, then we'll look at the elevation certificate as well. But since FEMA made their changes a few years ago, it doesn't matter. A lot of times if you have an elevation certificate or not, we're going to be looking at not only the FEMA flood markets, but also all of the private. And in today's market, the private flood markets truly most of the time are beating out the FEMA rates. And those don't have an elevation certificate requirement. So when you're first looking at a home, get those preliminary costs from your from your insurance broker, whether it's my office or any other office out there, because that can save you too from having to spend an extra $300, $400, $500 on an elevation certificate if you don't need one. So I'll go on to the next page here. Characteristics to look for when you are purchasing a home. Again, it depends on, work with an agency that knows what they're talking about. So we have a lot of experience. We're experts in this market. We're going to tell you the good, the bad, the ugly, the great, because that's our job, again, is that education piece. The newer the home, the more carrier availability there's going to be, which opens up carrier eligibility, which is going to drive down your rates. But obviously, excuse me, even like my home, for example, I'm in the mecca of all these old homes that have been remodeled and systems have been updated, but it's hard to find a new home in a lot of areas too. So that's where those major system updates come in. So age and type of roof is a major one. If you want a roof that's going to have more roof life and carriers are going to look at with open eyes more than they are, let's say, a flat roof or a shingle roof, go for Tyler Metal. If you can get a concession, if the roof isn't in good condition, that's wonderful. We can get a roof a roof contract from a roofing company to get you through closing too. That's now available. So we can get creative to help you get through closing. There's a ton of options, but these are things to look for, because if you can avoid that issue later on, looking for that newer roof that doesn't show signs of wear and tear, that will definitely help you. Now, the wind mitigation factors, age of the roof does contribute into that, but the biggest, most premium driving factor is if that home has impact rated windows and doors or the impact rated shutters. And I'm not talking a little bit of a credit, we're talking thousands of dollars of savings on your insurance policy, depending on where your home is located. So that's a huge one. If that home has impact rated windows and doors, that seller put in a significant investment into updating that home, which is a huge win for you as a buyer. And then hurricane straps. That basically means that when insurance companies are looking at it, how resistant is your roof from flying off your home in the event of a hurricane? It's because there's metal straps that are connecting your roof around the beams in your home. So that's what hurricane straps could do for you. If you don't have hurricane straps, that's one of those conversations that we'll have and say, hey, if after closing, if you invest roughly on average $1,200 to $1,500 to add on those hurricane straps to your home, obviously depending on the square footage of the house, it'll vary. But that usually that savings the first year alone will pay for that to be done. So that's another conversation that we'll have as we're reviewing those inspections. Upkeep and updates to major systems. So your insurance companies are going to look at the water heater, your air conditioner, electrical, plumbing, types of plumbing in the home, if they're ineligible types of plumbing that are still existing in an older home. So that's what will help you navigate when you're looking to purchase a new home, or things that Allison is going to talk to you about too, when you are looking at potential homes that you're going to put in an offer on. Now, if you're preparing your home to sell and you want to avoid insurance issues that potential buyers could run into, then you obviously can't control where your home's located or the age of your home. So those are kind of mute factors. People typically either want to be in a certain area because of a school zone or proximity to the ocean, whatever that may be. You can't change that. But obviously, Allison will help you prepare your home for presenting and for photos, so decluttering, depersonalizing. But there's also things that I highly recommend of making sure your roof is clean of debris and leaves, power wash it, trim back any trees that may be touching or overhanging your home, because those will come up as issues on insurance inspections. Is your roof in a state of disrepair? Are there repairs that need to be made before you start listing your home? It goes back to if that client, the buyer, is going to be able to obtain insurance or not, depending on how that roof looks. If your roof has a minimum of 5 years remaining roof life, truly in this market right now, we can get insurance for it, but it can't be in a state of disrepair. What an inspector sees may not be exactly what the insurance company is going to see as well. So the cleaner you can make your roof look, the better. Again, those wind mitigation factors that we discussed, what updates have you done to your windows and doors? Does it have shutters? Do you have the hurricane straps on your roof? These are all items that are going to majorly drive down the cost of the insurance to help that buyer get through closing. Again, going back to those major systems on the home, is your water heater less than 15 years old? That might be a potential concession you may have to give at closing, because most carriers aren't going to accept over 15 years old. Your ACs, again, we're good working condition. Your electrical, there are no restricted panel types that are prone to fire. Federal Pacific, Zinsco, there's a whole list of them. Plumbing, no polybutylene plumbing in the home. So those are things when you're getting ready to prepare your home to sell and to list. Are those items in good order, so that way nobody runs into issues, whether it's you or a potential buyer? So that's really what I wanted to cover today, is what factors into the insurance costs. I know the insurance is expensive right now, and it will eventually get better. With the market will eventually stabilize, but I think it's going to take us at least another year until we get to that point where there's more carrier availability, which the availability will help drive down rates. So really just working with an insurance brokerage that helps educate, and at renewal, we were discussing this before too, is there and willing to help you reshop your policy renewal if you see those rate increases, because they do happen and they are happening, and they can be pretty extreme. So that's really it. So I will end my share here and turn it back over to Miss Allison.
Thank you guys so much. I think that was really helpful. A lot of great information. And I think the most important thing that we can take away is, if you're considering buying, there really is no reason to wait. There are ways that we can help you find, different avenues to cover those costs. Like Max talked about, the down payment assistance. There's a lot of programs out there. And if you have people that are on your side, have a team like Candy and Max that are looking out for your best interest and are able to help shift things around and find some creative solutions, that's really going to be the best time, because as we talked about, home values just keep going up. So what you're paying today in rent versus what you're paying next year versus what you could be paying to get some equity in a home is really kind of what you need to take a look at. So thank you everybody for tuning in. I appreciate it. If you have questions, please feel free to reach out to any of us, and have a great night.
Thank you so much.